Mithil Pradhan, Chief Strategist, Derivatives and Technicals at Violet Arch Global Managers, is now joining us this morning. Mithil, good morning. Tomorrow is the expiry, plus we have the big Fed event. Of course, it's likely to be a non-event. You think both of these will be the near-term factors in the next couple of days?
I personally don't think so because, I believe that a particular month, a trading month, has two parts. One is the volatile part, which is usually the first 15 days, and the next 15 days is more of a sideways kind of a move. And if you see over the last 1 week or so, that is what exactly the market is doing.
Right. It also happened in December. In December, we started very started very volatile, and then essentially we became stable towards the end.
Yeah, that is the general fashion that the market has. Sometimes the first 15 days is sideways, and then, towards the expiry, the market gets volatile. But most of the times, the first 15 days will be volatile. Last 15 days will be somewhat sideways. Now, of course, the expiry, I'm not much into the habit of predicting where the expiry will be, but it can be anywhere between 7,400 and 7,600 because I think a temporary bottom is in place. So maybe the markets will try to inch up a bit. There are still a lot of shorts in the market. So some kind of short squeeze is still expected. So I will not be surprised if the market tries to move up a little higher tomorrow on expiry. But as far as Fed event is concerned, I don't think so. Looking at the dollar, etc., which is again going sideways, bonds which are going sideways for the last 2-3 days. So I don't think there is any kind of a build-up with respect to Fed that is going on in the market right now.
Right. What would you view as far as the overall global market setups are concerned? So global markets were very volatile. Thank God we were shut yesterday. And that's why we are opening in on a flatter side as global markets have recovered. You think markets will be very volatile globally?
No, right now is a time where markets are at a make or break position.
And that's worldwide global equities?
Yes, except Shanghai. No global market has decisively taken out the August-September lows. So if you look at Dow Jones, which is near August-September lows, S&P, Nasdaq, all near August-September lows. Hang Seng Nikkei had broken the August-September lows, but they now have rallied across that level. So, you can't say technically those levels are broken. My sense is that all of these markets are actually waiting for some kind of a trigger. Maybe some kind of a sideways move will start in the market. Nifty might not be able to go above 7,600 in the short term. Dow Jones will also tend to move in a very, very sideways kind of a pattern. My sense is that markets will now try to relax and wait for the next trigger. And that is when you will have a better idea. Now, mid caps and small caps are basically outperformers. In the last 6-8 months, they have outperformed. The best thing is that mid caps and small caps have not taken out their August-September lows. Okay, so if that is to happen, if that level breaks, then we are going to see a major fall. Otherwise, not.
Right. And how far are we from that level?
We are about 3% away from that level.
Okay. How important would be the Chinese markets recovery and crude in this entire make or break event? Crude recovery, that is.
Of course, if crude goes up, the risk on rally will start, of course. That is how I read it. But then when it comes to Shanghai, if you see from the last 1 week, global markets have stopped reacting to Shanghai in general. Even yesterday, all the markets opened down and then they rallied across. Maybe it's like, the effect of China is waning. Everybody now feels that, of course, China is going to go down. August-September lows have been taken out. There is no support till about 2,000 levels. We are looking at another, 30% kind of a fall. I think the market don't care anymore. And as a matter of fact, there is a proverb that markets do not react to the same thing twice.
Right.
So, I think it's all built in now.
Right. Let's talk about levels. You track it very closely. In the interim, you said that 7,600 is very, very unlikely to breach. You think between 74 to 76 or 73 to 76 would be the broad range for the markets till we get new triggers to go either on the upside or downside?
Yeah, it is more likely. So, this is the way I read it. Now, markets have two different trend decider points. One is at 7290, 7360.
These are firstly all cash level markets.
These are all cash level
right.
markets. 7290, 7360 is the lower end of the bottom and 8000 is the higher end of the top. Now, market has to move out of this zone at some point of time for a major move to happen. Now look at this. If 8,000 is taken out, even 9,000 will not be able to offer a major support, major kind of a resistance to the market. So then we are looking at, if you're buying here, you're actually looking at a 30% kind of a gain with, let's say, a 5% kind of a risk. if 7290, 7360 has to break, then all hell will break loose, because there is no support for Nifty till about 6300 levels. And certain Fibonacci studies will even predict the market going to 5000 levels. But that is, let's 7300 break first, and then we'll look at those kind of options. My thing is, right now it's the best strategy is to short call options, short put options between the range of 7400 and 7600. Play out this sideways zone. A lot of stocks have made very impressive bottoming patterns. But in spite of making those bottoming patterns, there have been no upside triggers. I have not got an entry in all these beautiful looking patterns. So I'm myself very confused about what the markets would do. I think let's wait 1 day or 2 days after the expiry, then it will be much more clear.
Right. Feb is an important month always because of the budget. Do you expect a pre-budget rally in the market? Is that something as a trend that we've seen would continue?
It is usually possible. See, if you're looking at historical traits of the market, then usually markets try to rally into January or February, and then they top out and then they fall. This time it has not happened. The markets have actually bottomed out towards January and February. So things can be a little different. As far as pre-budget rally is concerned, yes, most likely that happens on a seasonal basis, but I'm yet to get those triggers. I can't see those triggers, so difficult to take a call.
Right. Let's talk about two names, Power Grid and NTPC. Generally, we don't talk about these names. Generally, volumes are very low. They're looking in strong today, and over this entire volatile space, they have done decently well. Do you like these names?
No, actually not. In fact, NTPC, Power Grid, both are into long-term kind of a bear markets. Maybe not Power Grid as much, but Power Grid is more of a sideways kind of a move. Now, being a technical analyst, I would like to chase momentum, and both of these stocks are not showing momentum. So, no, I wouldn't say I would be interested in buying them right now.
Right. PSU banks. Let's start with Bank of Baroda. Bank of Baroda. Okay, just a minute. Godrej Consumer has declared numbers. 233 crores versus estimates of 322. This is looking in much weaker. But it cannot be so different than what is expected. Maybe it's the standalone and the problem of standalone versus the actual number. But Godrej Consumer numbers on your screen, 233 crores is what they've done. We'll just pull up the reaction as well of Godrej. It should be on the negative side. I'm just trying to open the release. And okay, if I look at Godrej, it's down about 1.5%. We are still looking at the numbers coming in or further details coming in. I have the release with me. If I look at the number, in terms of what's happening in it's okay. I have the number right. So consolidated number has come in at 322 crores. So it's come in broadly in line, 322 crores as far as consolidated numbers are concerned, and these estimates were probably for the consolidated ones. Net sales have come in at 2,353 odd crores. Again, a good set of numbers that we are talking about. It is a 100 crore miss, but it's broadly fine as far as the numbers are concerned. Mithil, just a word as far as the overall profit, as in the overall consumer space is concerned. Names like HUL, maybe ITC, how are they shaping up? They supported the market last time in 2008-9 when we fell. This time, there is no such support.
Yeah, because, they have rallied too much. Maybe, the way I look at the charts of FMCG or HUL or ITC, one thing is very clear. All of these stocks are into a medium-term kind of a sideways move. Now, the problem with sideways moves is that it is very difficult to presume when the sideways move will be over and when they are going to break out. So, yeah, if you look at ITC in a way, ITC is coming towards the lower end of the sideways move, which is around 300. A low risk kind of a buy. I would recommend that. When it comes to Hindustan Lever, it is also near the lower end of the sideways move. So yeah, you can do a kind of a buy on weakness and sell on rallies. These kind of stocks will support those kind of strategies. For HUL, approximately 760, 770 is a very strong support, and HUL comparatively is an outperformer to the market. So I would go with them. I don't think the bull market in FMCG is currently over. It's just that they are going through a short-term kind of a weakness.
Right. Mithil, thank you so much for taking our time for us.